So, is it the end of the economy? Everyone on social media is like angry, but what else is new? I'm a houseman, and I'm going to share some economic and cultural news from around the web, and we're going to that you can thrive and live on your own terms in the 21st century. Um, I really think that we're kind of in the pulling back the current phase in this point in history. We're learning a lot about corruption in corporations and government and the central banks and just the elites in general. So, in this episode, we're going to talk about the drop in Bitcoin and why it's really nothing to worry about. Inflation, possibly wrecking the stock market, but that's a that's just. We're going to talk about trading cards and why they're not going to be sold in Target and Walmart. We're going to talk about the burning down of Hollywood, how media CEOs are cashing in while their work employees are scraping by. We're going to talk about Ellen Degeneres. We're going to talk about Disney's critical race theory training, and I'm going to share some referral links that'll help me and help you. They'll support the channel, and it might help you out too in your business or your career. Before we get started, you can head on over to natehausman.net to check out some other content that I curate from around the web. And if you find this information valuable, please share it, give it a like. This will be on YouTube, and if my computer works right, it'll be on Odyssey and podcasts as well. Let's get started. 3 reasons why Bitcoin doesn't care about Elon Musk. So, I'm big on cryptocurrency and blockchain technology in general because centralized authority is just really the root of all our problems today. So many of our problems because it lets the narcissists and the toxic individuals just totally abuse people. Blockchain technology is a decentralized application that works on computers all around the world. And Bitcoin really is the future of assets. So, Elon Musk decided Tesla's not going to accept Bitcoin as payment because of environmental reasons. And you think, oh no, we're having a huge crash cryptocurrency. I can assure you, if you've been holding cryptocurrency for five or 6 months, this is just another Thursday. So this article from Cointelegraph, 3 reasons why Bitcoin doesn't care about Elon Musk. On Thursday, fresh from its dip to $45,600, Bitcoin is trading above $51,000, having regained over half its lost ground. With the drama still spreading, Cointelegraph considers why, on a fundamental level, Bitcoin is ultimately resilient to the actions of a single user, no matter how influential they are. Proof of work doesn't care. Bitcoin's proof of work algorithm rewards both miners and investors over time because their years of work make the network stronger. The longer Bitcoin continues, the less likely it is to succumb to an attack or see its participants leave the network for a different cryptocurrency. This is precisely why Bitcoin continues to be the cryptocurrency of choice with competition. As many argue, no altcoin can do Bitcoin like Bitcoin. When it comes to Musk, proof of work is significant for another reason. Just because one prominent investor changes their mind on Bitcoin's merits and the price drops, miners have no added incentive to quit the network or cash out. This aspect of network effect means that Elon Musk ultimately provides Bitcoin with good rather than bad publicity. Even as the price shows, his words and actions do not change what Bitcoin is or what it's capable of. Why is proof of work crucial for Bitcoin? Because a valid hash is how peer-to-peer nodes know the block is valid, without needing a server or trusted third party. Plan B, the creator of the stock and flow family of Bitcoin price models, commented on the phenomenon. Price trends don't care. Despite its abrupt dive after Elon Musk's words, Bitcoin's recent price action speaks more to its resilience to criticism than its susceptibility. In the event, Bitcoin spent a mere 2 hours in decline before reversing and holding higher levels. Not just that, but the dip also fits with regular price behavior seen this year and did not even violate any long-term price trends. This time, Musk likewise failed to topple an indicator, and the brief wick to 45,650 was extinguished when it met the 21 EMA on the way down. That's some technical jargon. Bitcoin energy consumption doesn't care. As ever with Bitcoin, it pays to zoom out. Once the dust settles on Musk's individual energy criticism, the notion that Bitcoin uses so much energy, the wider debate on how eco-friendly Bitcoin will continue in his wake. Most of the common accusations have long been debunked as short-sighted and lacking evidence. Just last week, Michael Saylor, the CEO of major Bitcoin hodler MicroStrategy, gave a public interview in which he reinforced the lack of merit inherent in claims that Bitcoin is bad for the environment. Responding to Musk, he called Tesla's decision to stop accepting Bitcoin for payments ironic. Ironic because no incremental energy is used in a Bitcoin transaction, he wrote on Twitter. Expanding one's time horizon is thus essential to understanding why Bitcoin is worthwhile. As Saifedean Ammous, author of the popular book The Bitcoin Standard, often mentions, having a low time preference allows a Bitcoin investor to understand that rejecting sound money for reasons such as the environment is more energy wasted than unsound alternatives. This time, Ammous did not mince his words. Unless you've also switched your rockets and battery manufacturing to more sustainable energy, you're going to look like a clueless big hypocrite here, he tweeted, alluding to Musk's other company, SpaceX. I know from the channel Crypto Zombie, the mayor of Miami, his name is Francis Suarez. He happens to be very bullish on Bitcoin. He wants to move part of Miami's treasury into Bitcoin, and he wants to set up some mining facilities in the Miami area. And he was interviewed. This video was a few weeks or a couple months back, and you can go on Crypto Zombie. I also shared the video on my blog. Mayor Suarez says most of the Bitcoin mining in the world happens in countries where there aren't very good environmental clean energy regulations. It'd actually be beneficial to the environment if more mining was done in the U.S., and that's why he wants more to happen in Miami. A lot of it is infrastructure, and the United States is actually very well equipped to produce Bitcoin efficiently. And it just goes to show, for every critic, there's probably going to be another supporter, another big influencer who will create another news cycle and build the price back up again. Right now, Bitcoin is kind of at a discount, so if you have a little money to put in, go for it. Moving on, from Zero Hedge, inflation will kill the stock market. Zero Hedge writes that, according to this author, Nave Dave, I'm not saying nothing else can do the job before inflation fully gets here. Just kind of inflation I've been writing about certainly will do if nothing else does. That's what terrifies the market, and for a very good reason that may not be the first one that comes to investors' minds. Many talk about the risk premium of investing in stocks. As inflation rises, bond yields rise to offset what will be lost to inflation. As bond yields rise, stocks become less competitive. That's a problem, but it's not the big problem. Not this time. The big problem is that we all know where the money for stocks is coming from. It's coming from the Federal Reserve and the U.S. government by borrowing and distributing the money the Fed prints. So the big problem is the Fed, the central bank. The Fed is getting tangled in a mess of its own making. Having made the case that high inflation is now already a given, it won't be long before the Fed is caught in a trap where it needs to continue creating money in order to keep the market rising and to keep stimulating the economy. But it won't be able to. That's why we hear the Fed talking incessantly about how inflation is transitory right now. The Fed needs to have all investors believe that the rapidly dawning period of inflation will be short so it can be ignored. The Fed needs the markets to believe that it can and will keep printing money. However, the Fed is just fooling itself. The longer it claims inflation is temporary so that it can ignore the rapidly rising numbers, the more inflation will move out of control because the Fed and the federal government keep the money printing and the armored cars for transporting it running around the clock. Figuratively speaking. The Fed may fool itself to its and our long-term harm, but it's not likely to fool the market much longer because the numbers will be coming in too high for the market to ignore. We saw that on Wednesday in how the market responded to news of the highest inflation in years, a number annualized at 4.2% in April, which is well below the level of inflation we're about to see this summer. And that's just the windup for the pitch. How inflation will fight the Fed and win? The danger inflation imposes is that if it rises as high as they're certain it's going to rise, double digits, then the Fed will be forced to raise its interest targets because the market will shove interest up regardless, making the Fed look dumb for claiming an interest target it cannot hold. The Fed that's not written very well. The Fed won't be able to do what it takes to hold interest down without creating massively greater inflation through its creation of new money. However, it's not just the bond vigilantes that will wrest control of interest out of the Fed's hands. It's that the stock market force will deal with inflation by fearing it, whether the Fed says it should or not. Consumers will also press Congress to press the Fed to deal with inflation. The longer it delays, the more massively the Fed will have to raise interest rates, just as Paul Volcker did in the 80s to get inflation under control. Inflation is a time bomb on the Fed's back. My thesis is that every month now, the Fed is going to find it harder and harder to maintain the illusion that it can keep creating money, pumping it into mom-and-pop investor hands, the retail investors, the Robinhood crowd, etc., through government stimulus programs, and keep trying to maintain low interest to pump money into the stock market via corporate stock buybacks funded on loans. Inflation will crush easy money. It rule. The Fed can rule over it, but only by taking money away and crashing markets that are utterly dependent on that money. Basically, the Federal Reserve is just printing so much money and giving it to everyone. Unemployment benefits, corporate loans or corporate subsidies. That is, everyone is putting it into whatever asset they can, whether it's the stock market, whether it's assets like Bitcoin and other things that people hope will keep their value. And now it's trickling down into commodities like lumber, like oil, like metal, like crops. And the problem with inflation is, when there's more money, when there's so much money, the dollar loses its value, and if it's just being loaned, it has to be paid back. Trying to see what the this article says here. The market is top-heavy and jittery under its own load to such an extent that it will crash if it merely believes the Fed will be forced to tighten. That's why it jolted as a force shock today, but it wasn't a shock at all if you've been reading here. It was expected. Here's the key. Arguably, the only reason stimulus has been possible is because there's been no inflation. If inflation comes back, all the safeguards investors have been given, free money from stimulus, will be dissolved and won't be able to come back to save the day. He said recent jobs data indeed suggests prices will rise. Price rises will be more serious than previously thought. The declines will be much worse than 25%, and if the FOMC, Federal Open Market Committee, is handcuffed because of inflation, the swift bounce back that investors have been used will not happen either, said Key. The fair value multiple on the SPX is not 30, it's 35x. What would bring that down to earth is the return of natural risk perceptions among investors, severely lacking right now. You see, rising inflation has the power to cut the Fed off at its knees. The kind of inflation I've been writing about can suck the mojo right out of the Fed. And that's why Jerome Powell is already doing his best to convince financial markets that the Fed wants higher inflation and convince them that the higher inflation it wants is temporary before it even begins. How much does all the stimulus money from the Fed and the Feds pouring into the market create the cash flow that made the past year's instability possible? Over the past 5 months, more money has poured into the equity markets than in the last 12 years combined. Do the math and ask yourself what happens if the money has to be turned off because inflation forces the Fed to stop creating too much new money in an environment of too few goods due to previous COVID shutdown shortages and the continuing problems they've set up. And if you don't think the market is precariously riding high on easy money, look at how much it is rising on rising margin debt, money owed to brokers. When the Fed has pressed hard to raise interest rates and stop printing money, brokers aren't going to be so free in lending money. Right now, it's easy money at almost free rates. More to the point, though, when the market does start coming down because of concerns about the Fed cutting off easy money, all that margin debt starts unwinding in a hurry as people are forced to sell assets and reduce their margin debt. As you can also see, huge rapid spikes like this in market debt tend to happen right before severe crashes. Sentiment can cause investors to overlook economic fundamentals for a long time, but a sudden change in perception of fundamentals long overlooked in an environment of high margin debt can bring a rapid correction to one's frame of reference. Currently, investors are overlooking fundamentals on the expectation the economy and earnings will improve to justify the market overvaluation. That is not likely to happen. Even if it does, perception of the financial landscape has been far too optimistic in most circles, as seen by the shock today, but you can see that's coming from a year away. The Fed talks as though it still doesn't see what is coming, but that's the same Fed that talked about how easy tightening was going to be. It appears that it had no idea that it didn't have an exit plan that wouldn't send sentiment sharply south and crash the market. That's why the Dow fell 682 points, 2% yesterday, and the S&P fell 2.14%, the Nasdaq 368 points. There wasn't much of a safe space to be found in stocks. And this article goes on. Let's go to the last few paragraphs to really get to the point. So inflation is becoming much hotter than the Fed led people to believe, and as recent patron posts have laid out, there's plenty more inflation already baked in on the producer side that will certainly be passed through. The author noted, you can expect to see that starting to show up on the consumer side now, and you just did. It's going to be inflation hot summer, which can sour sentiment, so stocks won't take well to that. To be sure, there's a lot of testosterone still determined to press stocks up no matter what, but a hot and humid summer will zap that sentiment as it did today, and it will keep zapping it no matter what the charts readers are prognosticating based on the current sentimental trends. Trends can change quickly in the face of facts if the facts crash in with enough vigor. If the Fed does keep moving forward with the same kind of blind ignorance and stubborn resolve to prove itself right that led to it keep pursuing its economic tightening regime, it will really be making things worse for itself and hard to tame. As one economist noted, we doubt this report will change the view of officials that inflationary pressures are largely transitory, wrote Michael Pierce, senior U.S. economist at Capital Economics. It's just that there's a lot more transitory than they were expecting. Indeed, a lot more. And that's a lot of technical talk. Next up, 2 articles from bleedingcool.com, pop culture website, which sounds unrelated, but when you see that the dollar is losing its value, people need to put their money in wherever they can. Target stores halt sales of all trading cards from May 14th forward. In a move that will likely be widely regarded as frustrating yet understandable, Target has decided to follow in Walmart's footsteps, according to this article, to halt trading card sales in their entirety. Beginning on May 14th, Target stores around the United States will no longer be selling trading cards, including, but probably not limited to, sports cards of various kinds and cards from the Pokemon trading card game. There's no word on whether this embargo will extend to games such as Magic the Gathering, Yu-Gi-Oh!, or the Digimon card game, but judging from the general ignorance surrounding current blanketing policies, it's a safe bet to presume that it will. This embargo will last until further notice, meaning that there might be an end time. However, that time is not plainly in sight yet. As previously covered, this policy hurts card game players a ton, especially those without a local gaming shop that hasn't remained shuttered by the COVID-19 pandemic. However, considering the unfortunate circumstances, perhaps it's best for the time being. This past Friday, May 7th, a man pulled a gun on a group of people in a Target parking lot in Wisconsin over a dispute stemming from sports card limitations. Thankfully, no shots were fired, but the Target and local Trader Joe's grocery store had to go into lockdown for upwards of an hour. Therefore, while the embargo might seem absolutely outrageous to many, it makes perfect sense for the sake of safety, the safety of the company's retail employees. And there's also another reason. According to this related article by Bleeding Cool, I'm looking for the paragraph here. As we had written roughly a month ago, Target stores across the United States have been bottlenecking their supplies of trading cards, including not only the above-mentioned non-exhaustive list, but also sports cards. Target's mandates are a response to scalpers buying low from them and reselling high online. However, Walmart's actions might be because of that or because of theft by customers. Again, we don't know the exact ramifications of what constitutes inappropriate customer behavior here, but theft is a distinct possibility. So, a rare trading card, whether it's Pokemon, whether it's a baseball card, whether it's Magic the Gathering or some trading card game, a rare card can be worth thousands of dollars on eBay. Hundreds or thousands. So, it really is a scalper's dream to do. And when the dollar is losing value, people are going to gather up any kind of asset they can to hopefully keep hold on to their wealth. Now, why Target and Walmart would block this? Probably the same reason they try to limit, toilet paper sales last year. It's probably a panic selling situation, and they want to hold on to their stock. Speaking of panic selling, the southeast United States is they're putting gasoline in whatever containers they can. Gas cans, storage tubs, and even garbage bags. I've seen the pictures on Facebook. You wonder if some people have working brains or not. So this article from 98.1 K-Hawk, the country radio station in my area, the neck of the woods. Anytime you have a pipeline shut down, people start to panic about the price of gas. So when a cyber attack shut down the largest pipeline in the nation this weekend, the panic level suddenly seems justified. The Colonial Pipeline cyber attacks, believed to be the biggest against the American oil infrastructure, already has fuel prices on the rise, according to the Washington Post. The Post reports that fuel futures moved 1% higher in anticipation of a possible fuel shortage. As of today, the national average price of gasoline is at $2.96 per gallon. The White House is reportedly putting together a task force and the Department of Transportation is looking at relaxing rules to allow fuel to be transported easier. The Post reports that as of Sunday night, Colonial Pipeline is called maintaining security and getting systems back online were at their highest priorities. So when does the shutdown start to affect the price of the pump outside of the Southeast? The Post reports that the shutdown is unlikely to turn into a major shortage or lead to a major price increase. However, it could have a significant regional impact, especially in the Southeast. Officials say that if repairs drag on to next week, there could be some gas stations in the South that begin to run low on gasoline. Now, this last paragraph will put things in perspective. The Post reports that repairs that take into next week would also hurt people living along the East Coast. The bottom line is, if you don't want gas prices to soar, pray the repairs get done sooner than later. These last two sentences blew my mind. Back in 2016, this same pipeline was down for nearly 10 days. Gas prices in Georgia soared by 30 cents per gallon. So this has happened before, only 4 or 5 years ago. Maybe not a cyber attack, but pipelines do shut down. The important thing is to keep in mind is keep your cool and conserve your resources and put your money in assets that no one is thinking about somewhere else. So now's the time to talk about a company that I want to let you know about. iTrust Capital. I have a referral link in the description. iTrust Capital is a self-trade cryptocurrency and precious metals retirement plan. If you follow the referral link, I'll get a bonus, and you can start building up your portfolio in precious metals. Gold and silver are very undervalued right now. There's some funny business in the silver and gold markets, but once that's cleared up, the price of silver and gold are going to totally blow up. You don't want to trade in paper gold or silver. You want to trade in physical, and iTrust Capital will let you do that. You can build your Roth IRA here, and you can also invest into Bitcoin and the other major cryptocurrencies. So follow the link, and if you're a small business or a freelancer, Roth IRAs are probably the way to go anyway. So click on the link and do yourself a favor. Next story from Deadspin. If the page loads. Media and entertainment CEO salaries flourished in pandemic 2020 as the industry cratered. So Hollywood is not going to be the same after last year. The theater industry is like running probably not even half its former capacity, and people and the public has just learned to get out of the habit of going to the theaters. There are only a few people who really relish the experience. Otherwise, people can just stream at home, and streaming services are pretty much where the big studios are focusing their efforts on anyway. However, it was the worst times for the world. It was still a pretty good time for CEO pay. 10 top media and entertainment CEOs earned a combined $350 million last year, buoyed by heavy stock and option grants during the worst economic disruption since the Great Depression. Members of compensation committees on boards who set pay explicitly altered traditional performance benchmarks at some companies in a year when theme parks, advertising, and theatrical revenue tanked and production stalled. The numbers they looked at were not profit and loss columns, but rather leaned heavily on metrics committees called more qualitative than quantitative, including a pivot to streaming. Everyone got an A for effort. Case in point, Adam Aron, CEO of struggling theater chain AMC Entertainment, saw his package more than double to $20.9 million last year on a $5 million special incentive bonus. The stock fell 70%. The company bled cash and furloughed all theater staff. The bonus recognized the extraordinary actions taken by the management team during the COVID-19 pandemic to secure the company's survival and preserve stockholder value, the committee said. AM's compensation program is usually grounded in pay for performance, but since poor company performance last year was unrelated to performance by our management, it changed the benchmarks, at least temporarily. While our response to the COVID-19 pandemic warranted uncommon actions with respect to compensation programs, our underlying philosophy has not been permanently altered or abandoned, the committee said. They never make those statements to the upside. When external events lead to windfalls or high pay, you don't see companies adjusting for that, said Rosanna Landis-Weaver, corporate governance and compensation expert with As You Sow, a leading shareholder advocacy nonprofit. They generally only ever make adjustments in one direction. Compensation, to be sure, is not only an issue in media. The objects of overall CEO pay last year were so bad that Joe Biden even referenced his recent speech before Congress. He slammed lopsided pay ratios, which compare the pay of a chief executive to the average of a typical worker. Pay for 2020 is being widely analyzed and criticized not only because of the broad economic fallout of COVID, but also because CEOs, after the pandemic hit last spring, seem to want to share in the pain by foregoing or reducing base salaries. Skeptics back then called the cuts a smokescreen, or what's called virtue signaling, and predicted minimal impact because base pay has become the smallest element of compensation. They were mostly right. Proxy statements filed by the SEC through the end of April, which list the pay of a public company's top 5 highest paid executives, showed the highest paid media CEOs had packages of, on average, $35 million each. 6 were up from 2019, 4 were down. Overall GDP fell by 3.5% for 2020, the largest decline in 70 years. At a slow point in the second quarter, it was down by 34.3%, or $2.15 trillion. More than 20 million jobs were lost to COVID, and over 8 million have not yet returned. When the stock market took a really bad hit, which it did briefly last spring, I immediately got emails from compensation experts asking, how can we prevent the CEOs from suffering, she said. Moving goalposts shielded CEOs in a way that shareholders who took a drubbing or employees who were furloughed or fired were not. Minnow characterized 2020 packages as, it's been a tough year and we don't want to hurt your feelings. The article goes on, but I've read books such as The Org. I can't remember the authors. The book is actually titled The Org, O-R-G, and it's about organizations, whether it's corporations or government bodies. And also the book, The CEO Pay Machine, which explains how top corporate executives are compensated. It's not just their salaries, it's also things like company stocks and bonuses. And executive pay is really set by these committees on the boards of companies. And so you got to ask, who are the members of these boards? They're the executives of other companies. They're really just the upper class scratching each other's backs. So unless your company has a unique structure, like whether it's employee owned or if it's a different kind of corporation, like I think there's B corporations or what's the other term? Benefit corporations. It's not the upper crust is going to look out for itself. Either they don't know about the struggles of their frontline employees or they don't care. And the best thing we can do is probably pop their balloon and make them understand. Next article, also from Deadspin, and we're winding up here. Ellen DeGeneres addresses news of talk show's final season. She says, "My instinct told me it's time." And we all know about the drama on Ellen's show. Talk about a toxic work environment, the resignations of top staff on the show. Ellen DeGeneres has broken her silence on news that her talk show will end after its 19th season. "I'm announcing that next season, season 19, is going to be my last season. So the past 18 years, you have to know, has changed my life," she said Wednesday, taping the opening of the May 13th episode. "You've all changed my life, and I'm forever grateful to all of you watching, laughing, for dancing, sometimes crying. This show has been the greatest experience of my life, and I owe it to you all. Thank you." Early Wednesday morning, news leaked that the long-running talk show, which has been embroiled in controversy and toxic workplace accusations since last summer, will enter its final chapter. During her opening monologue, Game of Games host and comedian shared that ending the talk show was a decision she meditated on for a while, and she knew that season 19 would be her final one. She then reflected on the number 19, jokingly tying her final season to the 19th Amendment, which granted women the right to vote, and to potassium, which is number 19 on the periodic table. But beyond coincidences, the actress said, "Had a feeling it was time to move on." The talk show's 2020 to 2021 season has struggled with falling ratings since the beginning of the ongoing coronavirus pandemic in March 2020. Amid the crisis, DeGeneres broadcast her daytime talker from home before returning to the studio in September without a live studio audience. DeGeneres returned to the studio. Her set became the subject of controversy as former and current employees accused Ellen of fostering and promoting a toxic workplace culture that included bullying, intimidation, and racially charged microaggressions from bosses. After the story broke, Warner Brothers launched an internal investigation, leading to the exits of executive producers Ed Glavin, Kevin Lehman, and co-executive producer Jonathan Norman. Upon her return, DeGeneres addressed the allegations and apologized to her staff. Later in the fall, she welcomed back a limited number of live viewers. So, it's worth noting that, yeah, her show was run by Warner Brothers, and Warner Brothers is currently owned by AT&T. And if you follow other pop culture channels like Clownfish TV and Nerdrotic and Overlord DVD, you know that AT&T is like underneath, up their necks in red ink. They've purchased so many, they made so many acquisitions that they really need to trim the fat. They've launched investigations onto the set of the Justice League. They're selling some of their animation studios like network and I think don't they own Crunchyroll? They're trying to sell that. Crunchyroll, the anime streaming service. So that's worth noting. The bloom is off the rose. The bloom is off the rose on so many Hollywood celebrities, and we really are entering a new paradigm where celebrity culture is fading away, and we're supporting regular content creators on blogs, YouTube, alternative video platforms, podcasts. I don't even watch TV anymore. I watch entirely everything on either YouTube or Netflix. So this isn't just Ellen's instincts. She probably sees the writing on the wall. Final story. One that most people have heard about and has a positive outcome. Yesterday, the Walt Disney Company responded to my reporting. This is ChristopherRufo.com. This is Christopher Rufo writing. They responded to my reporting about its divisive diversity and inclusion program with a statement defending the company's commitment to inclusivity. The statement was riddled with errors and evasions, as he noted on social media. Today, multiple sources have told me that Disney has completely removed its diversity and inclusion program from the company's website, effectively scrubbing it out of existence. My reporting had generated tens of millions of media impressions and a significant backlash from the public. This is a major victory in the war against woke capital. Disney was peddling the most toxic elements of critical race theory, and my reporting led to immediate changes within the company. The truth is simple. Corporate diversity and inclusion is a scam. It's a reputation laundering mechanism for corporations and divides Americans into competing racial categories. Shut it down. That's a very short update, but let's look at why people were mad. Previous post, the wokest place on earth. The Walt Disney Corporation famously bills its amusement parks as the happiest place on earth. But inside the company's headquarters, a conflict is brewing. In the past year, Disney executives have elevated the ideology of critical race theory into a new corporate dogma and bombarded employees with trainings on systemic racism, white privilege, white fragility, white saviors, and launched racially segregated affinity groups at the company's headquarters. I've obtained a trove of whistleblower documents related to Disney's diversity and inclusion program called Reimagine Tomorrow, which paints a disturbing picture of the company's embrace of racial politics. Although the intention of the program might sound noble, multiple Disney employees requested anonymity out of fear of reprisals, told me that the Reimagine Tomorrow program has become deeply politicized and engulfs parts of the company in racial conflict. Critical race theory is basically identity politics turned up to path 11. Instead of valuing the rights of the individual, the worth of every unique person, unique human being, critical race theory shames and humiliates people based on their race for perceived slights that may have happened 200 years ago, hundreds of years ago, that the individual had no part of. It divides people into groups and judges people based on those groups, regardless of their guilt or innocence. The fact that people are waking up to this, and the fact that the public raised such a stink on Disney, is just another example of the curtains being pulled back. So, whatever nonsense you think is happening in the world, the fact that more people are aware than ever before, that's a good thing. That's a sign of progress. And we're leaving a lot of old broken injuries behind. And we're going to heal. So, all of this Hollywood corporate drama, it kind of makes you want to do your own thing, be your own boss. And that brings us to the next, not quite sponsor, but referral link that I can offer you. Fundwise Capital. Link in the description. Fundwise Capital is a network of business lenders who kind of do things outside the normal bank loan or business capital investor drama game. Click on the link below and click here and apply in 30 seconds. You can go through this spiel and if you qualify, you'll be matched with a representative who can get you a loan or a line of credit. And if you have any like business idea, whether you want to like open up a new website, a new shop, if you want to get into like real estate, you can get the jumpstart you need to get started. And once you apply for that capital, you can go to a website like this, bizbuysell.com. This is not a referral link, this is just something I've found while cruising the web. You can buy a proven business, or you can buy a franchise of a successful company. You can sell business, you can find a business broker. You don't have to come up with a business idea all your own. Once you get the capital, if you qualify for capital, you can find a line of work with a track record. And once you have that business, I recommend you buy my book. The ebook, Be True, Cut Through. It's on my website, natehausman.net, link in the description. The COVID-19 pandemic changed the way we work and do business. A lot more people are working from home. A lot more people are selling things online. A lot more people are finding side hustles. If you're not online, you will struggle. So I wrote this book, and it lays out a plan for how you can turn your website into a 24/7 marketing tool and business tool. It has links to helpful videos, helpful resources, and I researched this book. I researched the material over several months to bring you this comprehensive package. So go to my website, natehausman.net, and you'll be supporting my channel, and you'll be doing yourself a favor. So that's it for today. You can also go to my website for lots of other content. I curate information from all over the web, and I don't just talk about economics and culture. I talk about psychology. I talk about health and fitness. I talk about self-defense. I talk about your relationship with the higher power and how you can make the world a better place by pursuing that relationship. So I'll leave it at that. I hope this information helped you out and is benefit to you. If you like this content, share it. Email to a friend, and I will see you next time. Thank you.